At least 2 people were behind an alleged $1.7 billion cryptocurrency fraud scheme that once promised investors plans to list on the Hong Kong Stock Exchange, and even hired an actor to play as the firm's CEO, according to a lawsuit from the United States securities regulator. In a newly filed complaint from the Securities and Exchange Commission, the regulator charged Shui Li, aka Sam Li, and Brenda Bitcoin Boti Chunga on January 29th for their involvement in the scheme, which operated under several names such as Hyperfund, HyperVerse, and Hypertech. The two were said to have promoted various membership packages to investors with the false promise of guaranteed high returns from cryptocurrency mining operations, and allegedly used the ill-gotten proof gains to buy luxury cars and condos and fund crypto wallets. A bit not making there somewhere, there's something. Obviously, it was where you buy the case of that report and refusing all the cases, all the rest of the cases. Their date, she, along with Lee, is also facing charges from the U.S. Attorney's Office for the District of Maryland for conspiracy to commit securities fraud and wire fraud. Well, Chunga has also pleaded guilty to the criminal charges. A third person, promoter Rodney Burton, has also been charged by prosecutors. According to the SEC, Lee once told recruiters that Hypertech planned on listing on the Hong Kong Stock Exchange by 2022. The securities regulator also alleged the pair shared fake screenshots of several media appearances from CNN and an Amazon Prime documentary called Next Blockchain to boost the firm's reputation. The firm's marketing efforts even went as far as hiring a Thailand actor to promote the launch of HyperVerse, with the fake actor portraying its CEO, the SEC claims. The SEC claims Lee lured in more recruits by implementing a pyramid scheme-like referral system to reward existing members for recruiting new investors, in addition to false promises that new recruits could partake in initial point offerings at 20-30% below market value. Chunga is accused of taking $3.7 million personally, which was spent on a $1.2 million house in Maryland, a $1.1 million condo in Dubai, a BMW, and designer clothing, while Lee took around $140,000 in cryptocurrencies into a wallet under his control. The SEC said in a business which operated between June 2020 and May 2022 illustrates how fraud and non-compliance with U.S. securities laws and the cryptocurrency industry continue to run rampant, said Gurbir Esgrawal, director of the SEC's Division of Enforcement, in a January 29th statement. The SEC seeks permanent injunctive relief, conduct-based injunctions preventing the defendants from participating in multi-level marketing or cryptocurrency offerings, disgorgement of ill-gotten gains, prejudgment interest, and civil penalties, while Chunga is based in Maryland. Lee is an Australian national who the SEC believes is currently living in the United Arab Emirates. Lee is also reportedly being probed by the Australian securities regulator after his other failed cryptocurrency business, Blockchain Global, collapsed in 2021 with $58 million owing to creditors, according to a January 23 report by The Guardian. The Australian Securities Investment Commission may pursue charges against Lee and his 2 business partners, Alan Guo and Ryan Su, for potential breaches of the Corporations Act